Good evening. Hope you all had a fantastic Friday. Today the market rose after positive economic data. The Dow had a strong gain of 0.57%, while the Nasdaq was marginally better with a rise of 0.6%. Lastly, the S&P 500 performed the best today as the index rose a similar 0.67%. According to the Commerce Department, personal consumption expenditures, which is a measure of household spending that takes into account most all transactions, rose a seasonally adjusted 1.9% in the month of July when compared to the previous month. Although the gain is seen as positive, it is clear that it began to slow down as the expiration of the enhanced employment checks came and there was a rise in coronavirus cases throughout the month. The report also showed that spending in July remained 4.6% below the levels from February. Many economists are worried that spending will fall off in the months ahead due to the absence of enhanced unemployment checks. Recent data through August from private firms suggest consumer spending overall appears to have made up much of the ground lost during the worst of the pandemic, though the recovery is uneven across the country and might have flattened out. Spending on grocery items has fallen in the month of August, which is seen as a sign that many Americans are beginning to hurt for cash. Restaurant bookings and travel spending also remain depressed. But the report also confirmed recent data showing Americans' retail shopping through July had surpassed pre-pandemic levels. Also, many households are still earning more than they are spending during the pandemic, which economists say could fuel consumer spending in the coming months. The personal saving rate was 17.8% in July, which was down from 19.2% in June and 24.6% in May, but well above the 7.6% rate seen in January. The Commerce Department also reported that personal income increased 0.4% in July after declining 1% in June and 4.2% in May. Lastly, core inflation rose by 0.3% during the month, coming in below economists' expectations. In short, the economy appears to be recovering. However, the recovery isn't immensely strong, and has been uneven throughout parts of the country in various different sectors. However, there are worries about what spending will look like in the coming months due to the end of unemployment benefits. U.S. consumer sentiment, as measured by the University of Michigan, also came in above estimates, as the index provided a reading of 74.1, which was up from 72.5 in July and above estimates of a reading of 72.9. Despite an increase in the index, the levels still remain near pandemic lows. According to a top Trump aide, White House Chief of Staff Mark Meadows, Trump is currently willing to sign a $1.3 trillion coronavirus relief bill, which is an increase of $300 billion from the Republicans' initial $1 trillion offer. Regardless, Pelosi has rejected the offer and is sticking to her demand for a $2.2 trillion package. It looks like the wait for financial aid continues. All sectors remarkably ended the day in the green, but no sector performed better than oil and gas, as the sector rose around 2%. Basic materials also had a good day, as it had a gain of around 1.7%. Lastly, financials, industrials, and technology all gained around 1%. Every basket of stocks ended the day in the green, but value was the best performer as a whole. The best performer in the entire S&P 500 for the day was Western Digital, which is a computer hard disk manufacturer and data storage company. Shares gained nearly 7.4% after computer hardware stocks were boosted due to strong earnings yesterday from both HP and Dell. The other big gainer was Carnival Corporation, which is a cruise liner. Shares rose 6.76%, surrounding the optimism sparked by the rapid and cheap testing that will be able to be provided by Abbott Laboratories that may allow for safe travel in 2021. The biggest loser of the day happened to be e-commerce website eBay. Shares lost 3.62%, but it's not clear as to why shares fell. The other loser was Tractor Supply, which is a chain of retail stores that offers home improvement products with focus on agriculture, livestock, and lawn and garden care. Shares fell 2.72%, but again, it is not clear as to what sparked this movement. The retailer is expected to benefit from the damage caused by the hurricane. To cap off the week, we are only covering one company's earnings. This happens to be Big Lots, ticker symbol BIG, which is a retail chain of discount stores. Big Lots had seemingly strong earnings, but they were by no means able to be considered blow-away earnings. They beat non-GAAP EPS estimates by 5 cents, as they had a gain of $2.75 per share. Revenue grew 31.2% year over year, but only beat estimates on the top line by $30 million, as they finished the quarter with sales of $1.64 billion. To top this off, they also beat on comparable sales estimates, and the CEO said that they expect the strong trends to continue. Investors clearly were not impressed by any means, as shares fell a horrible 10.31%. That is all that I have for tonight. If you enjoyed the content, please leave a like and subscribe. I hope you all enjoy your weekend and the rest of your evening. Thanks for spending your time with me, and I look forward to seeing you again on Monday.